Welcome to the BF Anderson Technical Report for August the 2nd. I want to get into a kind of a technical subject this morning that may confuse some people, but let's work at it anyway. This is a graph of the CBOE options equity put call ratio. Now, I do not get involved in options simply because I don't think it's a fair bet. It's just not an area that I think is wise to fool with. But you can use this as an indicator, as a tool. Now, as you can see here with this particular graph, very confusing. Looks like an oscillator. You can't really even begin to figure out what's going on here. There's no trend. There's nothing to go by. So we can then move to a better way to examine this by using the good old moving averages. Now, what I've got here is the same graph, but I have removed the price of the ratio, and I've replaced it with a 15-day moving average. Now, we did a little bit of back testing on this to determine that this was probably one of the better ways to measure sentiment. Now, what I mean by sentiment is this. Think about it. If you understand auction markets, let's say you're in the cattle business and you go to the cattle auction house to buy your cattle on a certain day. Now, you get there and the cattle house or the auction house is completely packed, standing room only. People with credit line statements in their back pockets. They're actually borrowing money to buy their cattle. That would probably not be a real good day to buy your cattle, whereas if you went to the auction house and it was half empty and so forth. So what I'm talking about here is fear and greed. So when this particular indicator goes down, when this moving average line goes down, it's telling you that call buying, which is betting on positives, greed, when the line is going down, it's telling you that there's an extreme amount of greed and optimism in the marketplace. In other words, the market is just too hot. So what we need to be aware of is the swings back and forth in optimism and pessimism, or greed and fear. So back here, as we remember in January, February, we went through a major correction that was led by extreme amount of optimism. Then we completely swung into the opposite direction and went into fear. So what I've done here is I've quartiled these zones, and you can see here that just recently, back in late June, we started to get a little too hot, a little too optimistic. So now we're working our way back up. I would say that if someone was looking to add money to their portfolio, or they were looking at a stock to buy that they wanted to buy, if you get into these upper regions, this would probably be a pretty good time to buy your cattle or to buy your stock or to add money to your portfolio. However, when you get into these periods of extreme optimism, might be a kind of a time to even lighten up, or anything in your portfolio that's not acting well, or it might be a good time to sell your cattle. So this is something we use. We look at it just about every day. If you notice on the market report that I have attached to this email, we have a fear-greed index, which is a combination of factors. But sentiment is very important. It is a secondary indicator to trend, but it is an important thing to know. You just don't want to jump in with both feet when everybody else is doing the same thing. Now, I want to kind of change the subject here a little bit. I've got another ratio here. Now, this is the Russell 2000, which is the small cap stocks, compared to long-term bonds. So when the line is going up, stocks are doing better than bonds, and when the line is going down, bonds are doing better than stocks. Now, we can go back in time. And like I say here, recency bias. We have seen this movie before. We're not going to be fooled again. So in other words, we've had two major tops in the Russell 2000, or this ratio, since 2000. Well, since 99. So you get up into this area here, and then bad things happen. And then here we go again. We got back up into this area again, and bad things happened. Now we're back there again. So do we see where bad things are getting ready to happen? Because the thing to note here is that not only has the ratio broken out above the box, it has held. And so that can change, but right now let's just kind of look at something important. Let me point this out. Now I'm going to take this point and show you something that might be of interest to you. This is the S&P 500 index using a 50-day moving average. Now the market peaked in March of 2000. Now this graph is showing the peak in the March of 2000. This is 2000. So you can see once the market topped, bad things started to happen. So the moving average dropped terribly, dramatically. So then if we go back and we look at this particular point right here, the second point, you can see pretty much the same picture. We get a peak in the market, and you can see what happened to the moving averages. Bad things happen. Now, if we go to where we are today, we really don't see anything like this. This is what we're seeing. We're seeing the S&P 500. The moving average is definitely in an uptrend. No downturn at this point. I believe this is a bull market. It's going to last for a while, and maybe 3 times is the magic number. Now, another little factoid that you might be interested in knowing is that for the last 11 times, going back to the 1930s, the S&P 500 rose every month from April through July, which we've done. The rest of the year was up every time with an average gain of 11%. So what this would say is, and it kind of confirms my work, is that we're going through a correction right now. August will probably be a little difficult. However, we could finish the year very strong. We could. Now, what's going on with the market right now? I want to kind of talk about that. It's kind of a current situation. The market is worried, and there's some uncertainties out there, and let's just talk about it. I think one of the uncertainties out there is that what are interest rates going to do? Well, as we've talked many times in the past, if we go back and look at interest rates, they have been rising. Now, they kind of got stuck up here around 3%, pulled back, so forth, but we are breaking out above this line here and going to 3% on the 10-year Treasury for the first time in a while. And if interest rates rise, there's going to create some problems in the market in certain areas, not necessarily growth stocks, more fixed income, bonds, dividend-paying stocks, things like that. So if interest rates rise, which they're doing, which means economic activity, that's actually a good sign, but that is creating a problem for the market. Now, another problem the market's having is corporate earnings. Facebook announced earnings, and the stock dropped the most ever in history in market cap. It dropped about $120 billion in market cap in one day. That's the biggest one-day drop for any stock since the beginning of time. So this is a major, major warning that there's some type of change taking place, and it's primarily in the FANG stocks. Now, the growth stocks are getting hit, but our indexes look fine, so the bull market is still intact. Now, if we take another look at another FANG stock, this is Netflix. You can see here what's happened there. They missed their subscriber number, their new subscriber number, by a very large amount. So the market's worried about that. Now, the other thing that I think the market's worried about, and I think this has a lot to do with the tariffs, this is the PGJ, which is a Chinese fund. This is Chinese stocks. And you can see here that these stocks are breaking down and hitting new lows. So I think the market is concerned about what's going on with the tariffs. However, it looks like China is going to lose this thing if they don't start negotiating or getting back to the bargaining table. Their markets are taking a very big hit, and this could really impact their economy, and I think the market's worried about that. So let's take a look at the top 5. Now remember here on the top 5, what we're going to see is a lot of rotation. There's a lot of changes going on in the market right now. So one stock that is doing incredibly well, came out with really good earnings, is Advanced Micro Devices, which is semiconductors. You can see the breakout, and the stock has really been strong. Again, Turtle Beach, which has to do with gaming, headsets for gamers, close to a new high, acting well. Illumina. Now, here's a new name to the list. This kind of shows you what direction the market's going in. This is biotechnology. Illumina makes testing equipment for biotech pharmaceutical companies. The company announced their earnings here last week. Fantastic report. Stock's doing incredibly well. We're taking a look at it. Now, here's another company in financial services called Square, which is the little devices that you see on people's iPhones as they swipe your credit card. But they're getting into electronic payments. This stock continues to look well. Now, here's the last stock. Now, they announced earnings last night. This is TripAdvisor. Stock is down hard this morning, so it probably will fall off the list. But the main point I'm trying to make is you want to understand sentiment because it is a way to improve your timing on when to add money to your portfolio or to buy stocks or to actually pull money out of your portfolio and to sell stocks. So pay attention to when the market gets too hot or the market gets too cold, and right now we're somewhat neutral. Let me know if you have any questions. Thank you very much.